despite substantial inflows into U.S. spot Bitcoin exchange-traded funds, with more than $1.5 billion added in just the last 3 days and an unprecedented 18-day streak of positive inflows, BTC's price remains well below the highly anticipated $100,000 mark. The digital currency trades at around $71,000, a 50% increase since the ETF's inception, but short of setting a new record high. And even more cameras, they shared insights in X addressing the community's burning question: why aren't we at $100,000 yet? According to Edwards, the answer given lies in several key factors beyond just the ETF inflows. Edwards points out that U.S. spot ETFs have absorbed 200% of the BTC mine since their launch in mid-January, a stark indication of robust demand. Despite such aggressive accumulation, the price surge expected by many market observers hasn't materialized. The inflow into Bitcoin ETFs represents a historically significant demand, yet we're observing a counterbalance, primarily due to long-term holder distribution, Edwards explained. From an all-time high of 57% in December 2023, the share of BTC's total supply held by long-term holders, those holding for 2+ years, has diminished to 54%. The shift translates to roughly 630,000 Bitcoins at about 300% of the year's total BTC purchases by all U.S. ETFs. This 3% shift, while seemingly minor, represents a substantial volume of Bitcoin moving from the strongest hands in the market to potentially more speculative or short-term oriented investors, Edwards noted. Additionally, some of this selling is not pure market exit, but rather transitions from older investment vehicles like Grayscale's BTC Trust to newer ETF products, which may distort the perception of selling pressure within the same conventions for them to save them. When the Edwards can be had of the capability and the entire problems are just to given the allies to help you. Material are better between ETF consumption and Bitcoin. Mind widen a lot over the next year. It also takes full quarters for institutions to review, sign off, and allocate at best, so that major ETF flows are likely still ahead of us. Time mentioned sign off, and he stated, time mentioned market timing and macroeconomic conditions further compound the situation. Edwards pointed out that June traditionally marks a lull in financial markets, including Bitcoin and cryptocurrencies, as it aligns with a risk-off sentiment among major asset managers. Moreover, since the March peak in Bitcoin's price, USD liquidity has been relatively flat and even slightly negative. This liquidity environment is crucial as it influences investor capacity to inject capital into risk assets like Bitcoin. Looking ahead, Edwards remains optimistic but cautious. He outlined 3 catalysts that could drive Bitcoin's price to $100,000 and beyond: increased daily buying volumes from ETFs, a decrease in selling from long-term holders, and a rejuvenation in U.S. liquidity are essential for robust price appreciation. While these factors may align in the future, the exact timing remains uncertain. At press time, BTC traded at $71,659